Are you completely oblivious as to what it is that you need to file in terms of taxes for your small business? Are you just shoving your paperwork over to your CPA and just expecting them to file whatever it is that needs to be filed? In this lesson, I'm going to help you think twice about your approach and break down some of the small business tax filing requirements for you in plain language. Let's go. The Debt Demolisher TV with Sophia Meloni. Hi everyone, it's Sophia Melanie, the Debt Demolisher, and welcome to the Debt Demolisher TV, where we make debt freedom the new norm and wealth building the natural nature of habit. So today I'm calling all entrepreneurs, all of you who own a business, who are running a business operations, and you just need to figure out how am I going to get ready for this tax year that's coming up, and what exactly is it that I need to file. Me being a former auditor, I often get a lot of questions pertaining to taxes and what it is that they need to do to not only minimize their tax liability, but also to figure out what is it that I'm actually required to file. See, most times business owners rely on their CPA, their bookkeeper, their tax man, whoever they have lined up to handle these important tax forms for them. But I'm here to tell you, as the owner of your business, as the official signatory of everything that flows in and out of your business, you are responsible for whatever is being taken place under your name, your business's name, whatever assets that you own. So I want you to be knowledgeable and aware of what it is that you need to file so that when you meet with your tax person, when you meet with your CPA, you can have that level of confidence to be able to really have a baseline understanding of what it is that they're talking about. And that way you can ask some questions to make sure that they are doing their job to satisfy you the most. See, here's the thing. A lot of times entrepreneurs set up their businesses and they're not taking into consideration what the tax advantages could be based on the structure that they set up. So oftentimes I get questions from people wanting to know how can they take advantage of certain things, or they have specific questions about what can they do to reduce their tax liability. And when we have these conversations, the first thing that I'm asking them is, how are they set up, or who set up their business structure? A lot of times people go with the LLC route. So with LLCs, it's a different structure whereby you could potentially file under an corporation tax return, you could file under an S Corp tax return, or you can file under a sole proprietorship on your regular individual tax returns, which is your 1040. So one of the things that I always like to share with people when they are in the process of setting up their business is to make sure that they have considered the tax implications, the tax consequences, or the tax advantages based on the business operations that they're setting up. Most times people don't want to think about this. They just want to set their business up so they can just start writing off expenses, and they're not thinking long term or thinking down the line. So for me, I have more than one entity set up. I have different business structures that are set up, and I'm making sure that both of my entities that are set up are positioned in a tax advantage manner. So what I want to share with you all today is, based on your business structure or your entity type, what federal tax returns do you have to file, right? This may seem like a lot of information or may seem like too much, but if you are a business owner, if you decided to go in business, this is something that you should have some level of awareness of. So I'm going to walk you through, of course, the high level types of business types, and then talk through the types of tax returns that needs to be filed as it relates to the business structure that you've selected. So what we're going to do, we're going to jump on over to irs.gov so that I can show you firsthand how easy it is to access this information and really get a general sense of knowledge and information for yourself as the business owner of your entity. All right, so as you can see, we are right now on irs.gov. irs.gov, of course, gives you all of the information that you need as it pertains to anything federal tax related, because this is the federal agency or the federal component agency that collects all of the taxes that we pay as taxpayers. So what I have on the screen right now is showing you what the different business types are that IRS outlines in terms of business structures that you set up. So first we're going to talk about sole proprietorship. So your sole proprietorship is someone who owns any unincorporated business by themselves. So what that looks like is you setting up a business, operating a business, but it may not necessarily be set up as an LLC. This means that you are operating under your name, and not only that, that you are accepting 100% personal liability for anything that you do under your sole proprietorship. So up next is partnerships. So your partnership business structure is basically a relationship between you and two or more other people as it relates to carrying out a specific trade or business that you're operating. So a lot of times you'll see law firms or accounting firms or different things of that nature, or CPA practices that are partnerships, and you'll see LLP or something along those lines. And so when you see that, that's an indication that this means that there is more than one owner associated with this specific business structure. Up next, which is one that I don't really touch on too much, but this is really international business. So for those of you who may be conducting business on an international scale, have foreign businesses with activities inside of the US or even outside of the US, you are considered a foreign or international business. And there's a whole nother set of tax obligations and tax returns that are associated with that. But for the scope of this training or the scope of this conversation, I will not be covering that. Jumping over to corporation. So when you think about corporations, a corporation is a legal entity that is separate and distinct from its owners. And so what that means, this is where shareholders come into play, because you may have an idea to birth a business, to create a business. However, you're allowing it to be separate from you. And so that means that you have other shareholders involved that have ownership in the company and basically can call the shots pretty much. Next is an S Corp, which is my favorite, to be honest, because of the tax advantages that are associated with it. But S Corps are corporations that have been elected to be passed as a small business corporation. And so what you do is you pass your corporate income, your income losses, your deductions, your credits, and all of those things that you've been able to earn through the business. It passes down to your shareholders. And so for you, if you are a shareholder, if you're an owner, a lot of times all of your losses, all of the income, all of the profits will funnel through to you to file on your personal tax returns when you get to the 1040 stage. And last but not least is limited liability company, or an LLC. And this is a corporate structure where members of the company cannot be held personally liable for the company's debts or its liabilities. So we have to be very, very careful with the entity type that we set up, understanding the fact that you want to make sure that your business type or your business structure is separate from you, so that you will not be personally liable for the debts or the liabilities that may occur as a result of the business that you stand up. So what I want to share with you guys today is, what are the tax filing requirements for these entity types? So starting with sole proprietorship, we all know that sole proprietorship is basically an individual type of thing. So there isn't really a separate entity. You are the sole owner 100%, and you're taking personal liability. And what that means is all of your activities will flow and be reported on a Schedule C, which is a profit on business or profit and loss for business income. And so what that allows you to do is categorize all of the income that you receive, account for all of the expenses that you've incurred based on the quote unquote business that you're doing under your own personal name that has not been established as an LLC. So I want to make sure that you understand the distinction between those two. So when you have a sole proprietorship, that means that your tax returns are reported under a Schedule C, which is under a U.S. Form 1040, which is your individual income tax return. For your partnerships, the partnership return is reported on a 1065. So a 1065 is the form number, and that is what you will use to file all of your business endeavors and all of your business activities related to any partnerships that you have. In that, of course, you'll be allocating the percentage of ownership between you and the partner or the joint partners, however many partners that you have. So that is something that you want to take into consideration as well. And what will happen is there are reports or schedules that you will receive as the owner of the company that you will then use to report on your personal tax return, which is the 1040. Going over to corporations, there is a 1120. That is the form for filing your taxes related to corporations that you own. The downside to corporations is that there's a double taxation that happens, because if you just have a regular C Corp, that means that your corporation is being taxed on its profits and on its earnings, as well as you as the shareholder and as the owner is also being taxed on the profits and the owners. So that's why there's a downside, or a lot of people really don't like to go the corporation route, because it's double taxation. The company is being taxed and the company's paying taxes on it. And then you as the shareholder, if you receive a K1, then you're going to be paying tax on it as well, because you're going to be accounting that income in your 1040. The last one, well, not last one, the next one, S Corp. This is filed on an 1120S. And so this means that it is a sub-chapter corporation. Most times this is for small businesses. And one of the things that I love about the S Corp is because it allows you to pass through the profits and the losses from the company down to the specific shareholder. So there is no taxation at the S Corp level. But what happens is once those losses or once those incomes gets reported down to the K1 and it gets funneled out to all of the shareholders, the individual shareholders will then account for that income or the loss, and then they'll be able to claim whatever those things are on their US 1040, which is the individual income tax return. When it comes to the LLC, this is where it gets a little bit different, because there is no separate form. So what happens when you have an LLC, you have an opportunity to file your profits, your earnings, your losses. You can file any of those things on any one of the forms that I just mentioned, not partnership though. So it would either have to be a sole proprietor, a corporation, or an S Corp. So you could file your limited liability taxes on a 1040 Schedule C, or you could file it on a corporation 1120 if you elect to do so, or you can file it as an 1120S, which is a subchapter. Now, in order to be able to do that, there are files and there are forms that you have to submit to the IRS to let them know how you want your LLC to be disregarded as, or to be elected as, or to be treated as for tax purposes. And so there's windows and there's different things that you can take into consideration as to when you can do this. But if you want to transition out of allowing your LLC to be taxed as a sole proprietorship, or if you want to change it to be taxed as an S Corp, you can do that, but there are forms that you have to file, and you have to, it's a timing thing too. You kind of have to consider when you'll be able to properly do that, where the IRS will accept it. So this is what I wanted to share with you guys and just walk you through the different business types so that you can really see that there are different forms that are required based on the structure that you have. However, there are instances where you could allot and choose to file your business endeavors or your business activities on specific tax returns. So if you are wanting to know more, you are in for a treat, because I'm going to turn this into a series. I'm going to be deep diving a little bit into each of these elements to help you guys get ready for tax season, especially for my entrepreneurs and those of you who are in the space of filing your taxes, because we are coming up on that process very, very soon. I'm going to be talking to you guys about deadlines, things that you need to consider, credits that you could consider, and tax preparation tips to help you get yourself ready to get your taxes filed on time to reduce penalties and things of that nature. So this is just the introduction to the series that we're going to be doing on small business tax prep. I want you to make sure that you come back. If you've made it this far, put in the comments, I'm coming back for tomorrow's lesson, because I need to learn about my business taxes and how to best prepare. I want to see you guys tomorrow. I want to see you guys on the next series. I want to see you guys each and every day. Make sure that you come back, and don't forget to subscribe. Make sure that you carve out time to really understand the intricate details of your business structure, so that when you go meet with your tax preparer and you meet with your accountant, you'll be able to be savvy enough to have a little bit of understanding of what it is that they're talking about. Because again, you are the business owner, and CEOs, business owners, are privy to everything that's going on in their business. So don't be ashamed of it. Don't be afraid of it. Just know that you're here, and we're going to get into this work. Let's go. The Debt Demolisher TV with Sophia Meloni. The Debt Demolisher TV with Sophia Meloni. The Debt Demolisher TV with Sophia